Dornbush download 174. I'm back. Hi, Mum. Andrew from Dornbush Partners, and of course,
Rod White from Dornbush Partners.
otherwise known as Dave.
That's me.
But that's a whole other story. I see you and Dan have been, and Michael, of course, have been doing Dornbush downloads whilst I've been doing whatever I've been doing. Markets, though, have taken a bit of an interesting turn over the last few days, Rod. What's the go?
Very interesting, actually, Andrew. It all started on Friday night in the US. The markets took a tumble over there. But basically, it's because of good economic news coming out of the US. The labour market over there is quite strong. So there's a worry that wages will increase, which will flow through to inflation increasing faster than what they thought.
Increasing prices. Yep.
Increasing in prices, and then it will flow through to potentially interest rates increasing over there faster than what they were expecting. So that's what spooked the markets in the US. And they took a tumble Friday night and Monday night as well.
Copped it on Monday.
Yeah. Absolutely copped it on Monday. Last night, Tuesday night, it was very volatile, but it ended up over 500 points up.
Because it opened down 500 and then finished up 500. So another one of these sort of 1,000-point, which sounds like a lot. But, one of the things that's really been getting up my nose is around the fact that, we've had the biggest point drop ever, which is, black and white is correct. But you actually need to look at the context. Like the Dow's now 26,000 points. So 1,000 points, even though it's a lot, it's as a percentage.
That's right.
It isn't.
That's exactly right. And basically, even there was a drop in the Dow, but it only takes us back to probably December.
Late December.
Late December levels. So yeah, you've got to take a step back sometimes and put everything into context.
I was reading a guy in the Chronicle this morning, the reputable Toowoomba newspaper, and he was talking about the fact that really what the US market was doing was just sort of blowing off some steam. It'll be hard to find an issue of that paper because I understand that he's probably gone and bought them all, but seriously, go and have a look online, because what I was talking about was the fact, exactly what you said, over that January period, the market literally just went like this. That's not healthy, and so really all we're doing is we're just handing back some of those later gains. Economically, everything's still pretty sound.
Yeah, well, it is around the world. There's a bit of a synchronised economic recovery right around the world. So Europe, Japan, Asia economies around the world are going quite well.
So from an ETF point of view, and we've been talking a lot about exchange-traded funds.
Yeah, how have they performed in this current environment, Andrew? Yeah.
Well, depends on which ones we're talking about. If we're talking Australian-based ones, they've come off like everything else has, but it's all relative, because again, most of them are just tracking the market. Interestingly, though, there's been one in the US which is a derivative-based one. So in other words, there's nothing physical behind it. There's no shares they're holding. It's all just sort of options and futures and so forth. It actually basically went bust. And so the big concern is when you're buying these ETFs, you need to make sure that there's something physically behind it. Because otherwise, in this case, these investors have done at least 84% of their money, if not more, in one day. So, and that's again partly because they maybe didn't understand the product, partly because the use of leverage. So whenever you're buying an exchange-traded fund, make sure that there's actually not a lot of leverage, if any, involved, or if there is, at least there's something physically behind it, as opposed to just these derivatives.
Yeah, for sure. It gets back to the old concept, risk and return, isn't it? Going to a derivative-based ETF like that, hoping for big returns, but there's a greater risk. That's what
Absolutely.
It comes with.
Now, speaking of big risks, not really, the CBA result this morning, how was that?
Yeah, it came out pretty well, pretty much in line with expectations, maybe just under. The 6-monthly result for the end of December came out a bit over 4.7 bill profit for the 6 months.
Which is actually down a bit.
Which was down a little bit, but they put some provisions aside they had that as AUSTRAC breaches last year.
Dodgy ATMs.
That's the one. And also the Royal Commission, the Banking Royal Commission. They put some about $200 million aside for provisions for that. That's
the lawyers' fees.
That's the lawyers' fees. That's
so
right.
Will
that be enough?
What are we doing? Why are we a lawyer? No, we don't want to be a lawyer.
No thanks.
But you're right. It was a cracking result. And I cut you off, but I'm sure you're about to say that there's actually a $2 dividend for the half year. So in other words, if you're buying CBA now, you're actually getting 3 dividends in 13 months. You get this dividend, you get the one in August, and then you get the one this time next year. So, you're looking at around a 7.5% fully franked dividend for 13 months.
Pretty attractive.
So would you be buying, I'll put you on the spot, would you buy CBA at these levels?
Oh, definitely. I think the price is around the $77 mark as we speak. So yeah, like with a dividend yield like that, even though you've got some headwinds with the Banking Royal Commission, it's a solid company.
And I'm with you. Probably the one thing that would I just keep, and I've been buying CommBank all morning, but the one thing I keep on saying to clients is not only the Royal Commission, but I think the other thing, and you spoke about it briefly before I rudely cut you off, they've put aside $375 million for this Austrac fine. Some people in the market are suggesting, and it's just a guess because we don't have a precedent, but it could be as high as $1 billion. So if that fine is less, happy days, that money will go back into more dividends or whatever. But if the tom-toms in the market are correct, you could actually see a bit more pain coming there as well. So, again, it's not going to be company-ending stuff, but it's more the uncertainty. Get through the Royal Commission, find out what the fine is. And, of course, we've got that new CEO as well. What's he going to do? So there's a few moving parts, but certainly at 77.40, whatever, if you don't have any CommBank, it's worth having a look at.
Yeah, totally agree.
Rod, any other pearls of wisdom you want to share with Dornbush Download Viewers 174?
It's probably it for me.
I think I've spoken enough. Till next week.